What is going on, my YouTube family? So it's been a minute, guys, but I am back. And in this video, we're going to show you how to make a pre-market plan. So this is the plan you're going to make before the market opens. And if the market does what you want it to do, you'll take action. Hopefully you'll make money, right? So to make a pre-market plan, it consists of a couple of things, right? We're going to look at the overall market trend, market condition, identify key levels, make sure there's no news getting in our way, and have a pretty written and defined criteria of what we're going to do and what we need to see to take action. Without further ado, let's hop straight into it. So this is going to be how I make my pre-market plan. Differs from everybody else, but this is what I do and what works for me. All right, so I'm a day trader and a scalper, meaning that I only take positions for a couple minutes to a couple hours a day, and I'm done. I close my positions out by the end of the day. So the first thing I do when determining a weekly bias is I have to look at the longer time frame to identify the overall market conditions. So let's take a look at NQ. So I mostly trade NQ and the S&P 500. And if you want a full course, free course on my strategy, that's down below. Also, if you want to watch me trade live for free every single day, you can join my Discord for free down below. But y'all know that are with me for a while that I only trade NQ and SPY. And looking at the overall time frame, I start on the weekly time frame, right? So what's currently happening here? So we're on an all-time high. Market's been rallying pretty strong and respecting a heavy trend, right? A pretty strong, heavy trend to the upside. No major sell-offs. Keep making new highs over and over and over again. So to me, overall, my bias when it comes to the weekly time frame, I want to potentially look for areas long. So I know just by analyzing how the chart's looking right now that if I enter a long position, even though if it's a short-term position, I have a higher probability of it going my way. Those of you that know me know I tend to size up or size down depending if I'm going with or counter trend. So after we look at the week here, I'm going to zoom back into the daily time frame to see what kind of has been going on for the past couple of days. So determining the market condition. So now that I've determined the trend, we know that we're in a long-term bull run, right? Obviously. So now I want to determine the current market condition. And the current market condition is honestly pretty choppy. We've been in a pretty choppy session. Nothing too crazy going on. No big drastic moves for the daily time frame, obviously. So we're in a choppy-ish condition, right? Let's go back into the 4-hour here and identify what's actually going on. We're in a very choppy. We have some big jerks. This is NQ we're talking about, up or down, but no clear-cut direction, in the shorter term time frame. Obviously, the longer term we're uptrending, so we know our positions going long will be much more probable of it working in our favor. Now, that being said, the condition of the market is still very choppy. So again, this will kind of play into a fact, well, hey, do I want to play inside the range? And usually when the market's choppy, you want to play inside that range and kind of avoid any sort of breakout. So now that we determine the market condition, right, just by looking at what the kind of candles are, what the range is, do we have higher lows being formed? Are we, in a current uptrend, which we are in a yearly or a weekly time frame, we're still uptrending. We're zooming to the daily time frame. We are still uptrending, right? But as we go down and down to the shorter and shorter time frames, we kind of see that we're in a little bit of a choppy range, in a little bit of a consolidation cycle, which is, completely normal. The market likes to go up, down, or sideways. So now that I determined that the market is kind of sideways, this kind of helps me identify that I want to take a play possibly inside of this chop. So the next thing to do now is determine our key areas, value areas, where if the price is at that price point, I'm interested in hopping into a trade. I don't want to take trades at random levels on the chart just because it looks good or just because I see a lot of volume. I only want to enter trades when we're at key specific levels. So the way I personally find key levels is I use supply and demand, I use liquidity, and I use order flow and volume. So I'm just going to be showing you how to draw supply and demand by looking at candlestick patterns, which if you combine candlestick patterns, or not candlestick patterns, sorry, just by looking at candlesticks, I guess they're not patterns. So if you combine candlesticks, right, with a volume profile, which I'm going to show you here in a second, and with order flow, meaning aggressive delta, you will be able to perfect these zones very easily. So let's just go over how I would draw supply and demand. So obviously you need the box tool, right, or just lines, whatever the fuck you want to use. And I want to look for areas on the chart where there is significant amount of pressure, meaning a lot of volume and a big momentum candlesticks to the up or down side. So just by looking at this chart, I can see a couple of levels, right? Right here, for instance, on the top. So what I look for in drawing a supply and demand zone, I want to see an aggressive move down or an aggressive move up, and I want to find the candle right before it or the consolidation period right before it. And for a supply zones or sell zones at the top, I want to use the top of the wick for the top of the zone, right, and the bottom body of the candle for the bottom zone. It's a very simple way to draw supply and demand zones using candlesticks, right? Top wick for and bottom body for supply zones of usually the candle before or the consolidation period before, right? For example, right here before this aggressive move up, we had a nice consolidation period. So I want to use the top body. So for a demand zone is the exact opposite, right? We want to use the top body and the bottom wick to identify that demand zone. So these become demand zones. Now, a lot of you will ask me, Elder, isn't this a demand zone right or a supply zone right here? It was a supply zone. Guess what happened? The supply zone is now invalidated because price broke through it. So whenever price breaks through a zone, to me, it becomes invalid. So now we have identified our key levels. We have a level above us and a level below us. So now that I do that in the 4 hour, I'll zoom down to the 1 hour, look to see if I can make the zone a little bit better. And honestly, by looking at this, what I want to do with the zone is make it a little bit bigger because I like this whole consolidation period for the zone better. Because right here, it will show you what volume profile does here in a second for us too. Right here, this zone is much prettier. And down here, I can even make this zone better. To be honest with you, I like this zone down here. So as we keep getting smaller and smaller into the time frames, right? 30-minute is probably my favorite. We'll keep perfecting and making these zones better. This one's good. Down here, this one I actually want to fix up and make a little bit better. If this will let me, there you go. I want to move this to down here. I like this level before this move up. So as we keep going down and down, we'll be perfecting our zones. Now, to make it even better, what you want to do is go to steadies, and I'm going to go ahead and add my volume profile to this chart. And there's a custom indicator that I have in the free course down below. You can get this custom volume profile. There's also a volume profile already in Thinkorswim that you can have for free, but this one I have is actually a little bit better personally. So I actually already have it. I'm going to go ahead and load it right here. And this becomes the volume profile. So this shows me the level or the volume by price for every single day. All of these blue boxes is a day. Let's go back here where this day formed, right? Now that I see this here, this yellow line is a point of control, meaning this is where volume was the highest in the whole day. So this kind of validates my supply even more. At this supply, volume was the highest. I mean, there was the most transactions at supply before this big sell-off, right? Now let's look at this demand zone we just have here. Where is the volume for this demand zone, right? It's honestly right here, right? Right in the middle is where we have the volume for that demand zone. So this demand zone isn't super strong. So what I would do when I'm seeing something like this, right, is I will kind of draw, and this is still a demand zone because if you look at the footprint chart or you look at delta, you'll still see an abnormal amount of positive delta here and sellers getting absorbed. This is still a zone, right? But this volume profile is going to show me is any extra zones kind of sitting in the market, right? So right here, I can't really tell by looking at 30-minute chart, but let's see if I can zoom into the 1 hour and kind of see a little bit what's going on in between this little volume profile level. 4 hour maybe, let's see here. Not much going on there. 15-minute. Let's see if I can get a pretty zone at the 15-minute. I'll go as the most I'll go is 15 minutes, right? The least I'll go. Sorry, the small time frame is 15 minutes. So right here, I am already seeing. So this day isn't over yet. So this VPOG line could change. Let's just pretend this day is over. What I like to see here, now we have a little consolidation before an aggressive move up with continuation. So I'll then go and draw this zone because now it collides with the VPOG. Or the volume point of control for this day. I'll draw that zone with the point of control with the consolidation period before the big move up, and it's a demand zone, so we're using the bottom wick and top body of the candles. And bam, there we have our key levels of interest. Now, the next thing I will do is then look at news. Are there any important news days or news releases, economic data, Fed speakers, FOMC, CPI, whatever it is coming out that day when I will be trading? If there is, there's only a couple of significant days that I don't want to trade, and that is kind of just FOMC, Jerome Powell speaking, and things like that. But if it's anything else, right, I will still, if I see an A+ setup, I'll take it. I'll drop my position size, and I'll just trade the chart. I will kind of just forget and negate news, right? I'll get the A+ setup, make sure my entry is tight, make sure my risk is tight. I like it tight. And we'll just play the charts, right? We'll forget about news. Unless it's Powell or FOMC, then I kind of just stay away. I'll stray away because at that point, it's basically gambling. That's how I make my pre-market plan. Again, trend, condition, key levels, any news. And then, well, the last step is kind of making the plan here. So what has to happen for us to get into a position? So let's pretend the day is just about to start. And we are chilling in a supply zone on the 30-minute time frame. So what I would do now that I have my key levels identified is I will drop down to the 5-minute time frame, and I will kind of determine what I want to see happen here. So, as y'all know me, I have a couple things that could trigger my entry, either be with order flow or with liquidity. So just by looking at this chart, I know that there are important levels of liquidity at this high that we've been holding. And, at this low, there's some liquidity right here at this bottom of this consolidation. Right here, there's more liquidity. And what liquidity is, right? We don't know that there's for sure liquidity. That's why we kind of combine it with order flow. But they're just highs and lows, high swing lows, daily lows, London session lows, New York low, whatever the fuck you want to call it. There's just highs and lows, or there could potentially be a lot of stop orders, or there could potentially be a fake out. So right here, just by looking at this position, what I would kind of want to do going into tomorrow, or pretend today, is if we sweep liquidity, if we push up past this high, we break this high, and we fail to hold above it, an order flow bookmap is kind of showing me a big ass red bubble appear right when we sweep liquidity. What I will do is then that is my trigger to take an entry short. I'll hop in short and I'll put my stop right at the top of it, or a little bit above the sweep, right? And then my take profit, well, for starters, will probably be this floor right here where there is a nice, obviously, support level. Then if we break that, it'll be the next floor right here, or wherever VWAP is, right? I look for any level where the price could reverse on me to take profits and to trim out. But very simple, right? If there's a VPOC in the demand, meaning that point of control for the day was untouched, I'll look for a touch of that VPOC, a nice rejection for an entry. Let's say we don't sweep liquidity. Let's say we push back into this zone and start consolidating, and I see large amounts of green bubbles start to appear, yet price is failing to move up. Or I see large positive deltas start to appear, price is failing to move up. This indicates to me that all these aggressive buyers are getting absorbed in supply, key word, they're in supply, meaning that there's a lot of passive sellers sitting there waiting to sell the market off. But that is pretty much what I look for to take entries. That's what I'll do for my pre-market plan. And something very important I want to leave y'all off on is always go back to your pre-market plan. Always follow your pre-market plan. Try not to improvise, because most of the time your pre-market plan is right. But I appreciate y'all watching this video. Make sure to leave a like down below and subscribe. And I will see y'all in the next one.